Okay guys, we're going to go over discount and premium, and these are our Fib retracements or Fibonacci retracements. So Fibonacci retracements, they give us a discount or premium range to buy or sell in. It's also known as OTE ranges, optimal trade entry. And they say optimal trade entry because it's the best place to take an entry when we have a retracement. So just read this little blurb here. In Fibonacci analysis, discount and premium levels are derived from retracement levels primarily using the 50% level. Discount zones are below the 50% level, implying undervaluation and potential long positions. Premium zones are above the 50% level, suggesting price may be overextended and might be suitable for a short position. So basically what that's saying is when price is delivering higher, like we have right here, we have price delivering higher, we want to see a retracement back into a 50% range or an optimal trade entry. Okay, now how do we get that? We draw our fib right here from the swing low to the swing high. And I'm just going to click on this and show you. I have the settings all set here. So this is what we have for settings. Now I will send you guys this. It's in the community also. So I have my 50% and my 0.618. Because between the 50% and the 0.618, they call that the golden pocket. And that's kind of like the golden zone to enter on a retracement. So this is the settings I have. Now I do have this 0.718 also, and I'll just click on it. And you can see it gives us this zone back here. Now I don't keep that on there. I'm just aware of it. Okay, I'm just aware of this zone because that's deep discount. That's a deep retracement. So we can reverse there also. So, but I keep the 0.5 and the 0.618. So we draw our fib retracement from the swing low to the swing high. Now that gives us a discount area. So discount would be anything below this 0.5 right here, 50%. Anything below this is considered discount to enter for a long position. When we're looking for a long position, price delivers higher. We pull back. We want to see a pullback to a 50% range or an optimal trade entry to look for an entry. Okay, so again, 50% below that is our discount range. Now I just have the 0.5 and 0.618, and that's what most traders do have. A lot of traders just have the 0.5. I like to see the 0.618 also because I was taught that this is the golden pocket. They call it the golden pocket to enter. Okay, so right here, price is delivering higher. We're coming down. So where's our next fib retracement going to be? Well, we would take our fib from the swing low to the swing high, and this is where we'd want to enter. Now, I don't just trade fibs. I look for levels. I look for fair value gaps also. You got to have some context with this stuff, But if I see one of my entry models is a retracement, is displacement above my level, retracement back to discount, fair value gap, then I enter. I know we've displaced above a level. I know that we've retraced back to a discount or optimal trade entry, and we have a fair value gap. So there's three confluences. That's good context to take the long trade, right? So right here, again, we draw it from the swing low to the swing high. Now anything below this 50% is a discount range to enter the trade. So why wouldn't we want to enter up here? Now, sometimes you get price comes down and just goes, right? Maybe it hits the first fair value gap, but it's not best practice to enter in premium. Okay, so anything above here is a premium range, right? So it's premium. We want to be in discount. We want to get the best price possible to enter the position to maximize our risk to reward. Okay, so this is how it is on the long setup. Now I'll draw some lines and show you on the short setup. But basically all it is when price is delivering higher, we draw our fib from the swing low to the swing high, okay? So we take our fib retracement, draw it from the swing low to the swing high. Now this gives us a discount range. Now I like to see fair value gaps in that discount range also, and maybe a level right here. Maybe we cross the level right here. That's context. We're delivering above a key level, we're tapping into discount, and we're also hitting a fair value gap. So it's a high probability setup. We're going to continue higher. Now, where's our target on this? Well, I'll show you where the target is. It's always the swing high, okay? So say we get in here, our target would be right here. Boom. That's our target, this buy side liquidity. This is the model right here. So when we enter here, we always scale out at this high put our stop to break even and let a runner go. But most of my position will come off here because we could come up, take that liquidity, and then dump, right? That's how the market reacts sometimes. So always the buy side liquidity right here. Where would our target be? This buy side liquidity right here, okay? And then say we have some more, say we have an hourly high or a 4-hour high up here. Well, that's where your final target would be, right? So here, this would be your trade right here. Say you get in right here. First target here, scale out. Second target there. Stop a bit below the discount range. Okay? So that's basically Fib retracements. They're not too complex, and once you start getting them on your chart and studying them, they're pretty simple. You guys get used to them very quick. And I use them in one of my entry models. I'm always looking for discount ranges. I used to trade them with options years ago. It's just a great system to have. You have to know how discount premium is, and you have to have these Fib retracements. So I'm going to show you a short position, and then we'll move down on the charts. Let's get into a short position example. So right here, we can see we have price delivering lower, right? We can clearly tell that we're in a downtrend delivering lower. So now we want to see where would we get our best entry for that. So we have the first leg down right here, and then we start to see a pullback. So once we see the pullback, we can establish that we have a swing high and a swing low, right? So now we want to draw our Fib retracement in that area. So we want to take our Fib tool, draw it from this swing high to this swing low, and this gives us a 50% range. Again, anything above this 50 is our discount area. Discount to short. You don't want to short down here. We're still in premium, right? You want to wait till we get above this 50%, and that gives us our discount range, our optimal trade entry. Okay, so now where would we enter the position? Again, I don't just enter off discount ranges or Fib retracements. I look for context, like a fair value gap, or maybe a key level there, something like that, a high time frame imbalance. But in this situation, we would take our short right here, okay? And where's our target? Our target would be the swing low right here, right there. That would be our sell side liquidity we want the market to reach. Our stop up there. I have my stops are always, based on structure. So if there's, some structure up there that tells me to get out of the trade, I get out of the trade. But something like this, that'd be a 27-point move. That's decent, right? So that's basically it for the short position. Now again, this next leg down, we have price delivering down. We establish a pullback. We have the pullback. So then where do we draw our Fib from? Right here, down to the swing low. Now this is deep in discount. This is good. We're deep into discount. We are above the 50%, right? We're above that 50% range. So that's basically Fib retracements. They're not too complex. You definitely have to study them. And I suggest just getting them on your chart every day, watching candles print and watching how they react. So again, this last leg down, where would our target be? Our target would be the sell side liquidity right here. Okay, so there's our entry. Say we have a fair value gap there, a level, target there, and then maybe we have a higher target or a lower target of a 4-hour low or something, right? Or some external range liquidity, right? Some a daily low or something like that. So this is how you would short the market using Fib retracements or optimal trade entries. I like to call them OTE ranges because just what I grew up trading and calling them. But discount versus premium or OTE range is what they are. So we'll hop down on the charts and we'll take a look at a couple. Okay, so right here we have a sell-off and then a run back up. So let's identify all the discount ranges. So right here we have a swing high and a swing low, right? So we would take our Fib retracement from that swing high to that swing low. This gives us a 50% retracement area. So anything above this 50% is our discount range. That's a discount price to enter the trade or an optimal trade entry. So we would take our short right here. Actually, let's jump onto the 2-minute and I can show you. There's actually a fair value gap right here. So this would be more context, right? So notice how price delivers up, pushes into that fair value gap, holds the discount range, and then continues lower. So we would enter position right here. First target would be this low right here. Stop above the fair value gap. Okay. Now, I usually wait for my levels. I like to pair these with my levels, but this is something an ICT trader would trade. And also I would trade this too, but I like to involve my levels in almost everything. But your first target would be this sell side liquidity right there. Okay? So that's how you would use a fib retracement in this scenario right here. So let's go down to the next one here. We have another retracement. We have this swing high, that swing low. What do? We tap that discount range, we tap this fair value gap, and then we continue to the downside. So again, we have our 50, our 60% range right here. We tap into that range right here. We hold the fair value gap and continue to the downside. Where's our target? Our target would be this first low right here. And you can actually see if we zoom out, all we're doing is hunting. This is all generated sell side liquidity. We're hunting all these lows. Look at all these lows. That's what we're doing. We're hunting all those lows. So when we see those retracements holding and fair value gaps holding, that's when we can say, okay, we're in a downtrend. Let's see where our fibs are. Let's see if these fair value gaps hold, and then we can take some positions. So even right here, we have another one. Like you can just see them once you start charting them for a while, right? So we got our swing high to our swing low right there. Now we just barely tapped that, but that's still a tap right there, right? Where do we go next? Swing high to our swing low. This one we're deep in discount, which is what I like sometimes. We tap deep into that 50% and 60% range. Okay, so there's 1, 2, 3, 4 discount range or optimal trade entries on that solid push down. And almost every one of them has a fair value gap in them. So that's what we want to see. I really advise you that if you are going to trade discount ranges, make sure you pair them with at least a fair value gap just to have extra context. So let's look at the long positions now on the run up. So I can see there's already a couple that I can notice. So let's just look at this little swing low here, right? Swing low, swing high. Let's take our fib tool. Drop from there to there. Where do we tap? Right there, our 50%. We also have a tiny little fair value gap in there. Not a big one, but a tiny one. A gap's a gap. Doesn't matter how big it is. It's just a tiny one, but we still tap that and run. So where's our entry? Our entry right here. Where's our target? Right there. Now that doesn't seem like a big trade. And you'd leave a runner, right? So you could have got maximized. But I'm just saying the first target's always the buy side liquidity that created the swing high. So that would be our buy side liquidity. And I always scale out there because you never know what the market's going to do, and it's good to take profits. And then anything else is extra. And then look at this. We actually hold this gap right here, right? So we got our swing low to our swing high. What do we have? Retracement back to our 50% area right here. So anything below this 50% is our discount, right? And we have a fair value gap right here. Again, I suggest you pair them with fair value gaps. Where's our entry? Right there. Target up top there. This would have been a good one. You could have let this run. And in situations like this, when you've already seen sell side liquidity, now it looks like we're on the buy side of the curve. We have a clear target here. Look at these equal highs. Equal highs are like a magnet in price. Okay, so you can get in on this, maybe the close of that candle to be sure, and then your target would be those equal highs, right? Stop just below there. So, 1.2 hour trade. Remember, base hits add up. So this is how we identify and map out our discount and premium ranges. Now, if you guys need any more context with this, or you want me to explain anything else, reach out anytime in the community. But basically what we want to do is draw our fib from the swing low to the swing high, wait till price retraces to that 50% retracement. On the long side, anything below the 50% is basically discount. We can enter the trade for a continuation to the upside. Now, we do like to pair them with fair value gaps, and I like to pair them with levels also. If I have a level and an OTE range and a fair value gap, that's my ICT level model. I trade that every time. Now, same thing with the short side. We want to see price retrace back up past that 50% area. Then we're not in a premium area. We're in our discount zone. We can enter the trade targeting the buy side liquidity. This is a great concept, and you really have to know about fib retracements.